Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the Mini S&P 500 futures contract, front month in nature, looking at the last print of 1,058 on this Friday, the 27th day of August, 2010. Wild session we had this morning, this early session. We actually knew that it was going to be a great, any kind of selling opportunity that we had, any kind of sell-off that we had in the market was going to be a great buying opportunity. Why do we know that? Well, just look at our intraday dynamics. These are proprietary indicators that we use to kind of gauge where the market is likely to go, and is price essentially faking out the crowd in general, and therefore presenting a great opportunity to fade the crowd, essentially. So as you can see right here, we had this gap higher to the upside. We wanted to fill the gap, but we also had this trend right here. That's why you get this choppiness around the trend. We needed to fill the gap that we had, but we also had, again, the choppiness around the trend. Huge sell-off to fill the gap. Very scary, but look at the bulls. Came right back in. Why did they come back in on this Friday early session? Well, look at the positive bullishness that we had in the market underlying. Look at this bullishness right here on the gap higher. Bullishness, 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 and bullishness, suggesting to us that although the gap was meager, at best, given the sell-off that we had late in the session yesterday on Thursday, that any kind of sell-off that we had, again, aforementioned, would be a great buying opportunity. Now, of course, we did not expect such an extreme move to the downside, but again, just proved to be a great opportunity, especially once we got a break back above the trend. You see this little pause right here at the trend on the snapback. We get a break back. We actually go to green bars, get a little bit of a retest there on the trend, 1050. Boom, we're 8 points in profit right there on a beautiful buying opportunity. Just getting in when all of the indications suggesting, but not even taking into consideration the advantage of being able to fade the sell-off, as it were. Again, looking for great opportunities to get in alongside. That is the discretionary basis on the intraday setups. Free ES trade for the day. Definitely looking for higher price movement to come. 1058.50 is where we are right now, but look at all the green bullishness. This is just a pause right here around 1060, we believe. Likely to get at least 5 more points above 60, so that's about 7 or 8 points from where the market stands right now. May even get to 70 by the end of the close. We'll scale back a little bit right here. As you can see, we're essentially just trying to fill this gap of the close right around 1065 again, so that's why we're expecting at least to fill that gap, a break above, at least on an errant move, given this is some pretty strong resistance we've had over here in the last 3.5 days, and also, again, 60 proven to be resistance. But a move above 60 will definitely confirm the anticipated move to 65 and the outside chance of getting up to 1070. So there you have a long trade. Certainly, if we get back to 1055, another great opportunity by the time you get this video to jump in alongside 1055, and you could ride 10 points to 1065. Go ahead and stop that, of course, around 1050. So a nice 2 to 3 to 1 reward to risk ratio. But there you have full all-out bullishness on the market. As you can see, another bit of a divergence here, suggesting the market was going to move higher. Full all-out bearishness on this was Tuesday, the 24th. Full all-out bearishness, suggesting these were great selling opportunities, and you actually got the continuation move lower. But again, bullishness here, certainly positive divergences, suggesting the market was going to go higher. Again, below the trend, and bearish, 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 bearish. Certainly negative divergence, suggesting the market was going to go lower. And again, of course, this morning, the market was likely to go higher based on any sell-off. Would be a great, based on our intraday dynamics, any sell-off would be a great opportunity to get in on the long side. So let's look at this snapshot of the day intraday picture. We're going to look at a chart of the daily market. There's the day trader 10.0 putting up a nice trade. Day trader 6.0, I think we actually had some losses yesterday. It's kind of actually a mixed day. Some of our primary portfolios lost, some gained. Day trader 6.0, beautiful trade yesterday. We were just looking at the 10.0, I believe. Right there, day trader 10.0, beautiful trades on the long side and the short side. And there's the market breaking up to certainly going to at least test 60 right now as we speak. So the trade may come to fruition while we're speaking. Nevertheless, there's the MRS-EM. Beautiful system is the MRS-EM. We'll go ahead and let's see if we can view. Look at that, breaking out to new highs. This is part of our Ultimate MSA portfolio, also part of our new Ultimate S portfolio that we're going to actually talk about here in a second. Have some updated performance numbers, figures for you, and some new wide-scale, very diversified portfolios. But there you can see why this portfolio, or this system, is part of our venerable portfolios, because our outperforming portfolios, because it is simply outperforming. But what we want to look at here is actually the MRS EM30, and we'll go ahead and look over here. This is really simply outperformed. Over time, we had this nasty drawdown, but over time, right, if you can weather the storm, right at new equity highs, $50,000 is the profit. This, of course, factoring in $15 per round turn for slippage and $5 in commission. But just look at how it's done since May. We're going to go ahead and switch over to this chart. Just since May, you can see right around May 5th, $20,000 per contract, the swing system, $20,000 per contract. Not really comfortable with the drawdown, $7,000, but we'll take $270 every time the thing trades, and that, of course, has been 77 trades, again factoring in the commission and slippage aforementioned of $20, which we'll look at here in just 1 second, can be, we certainly try and limit our trades as best we can to reduce our transactions costs. Look at the ESG. Our G portfolios have been lighting it up. Look at that beautiful long, beautiful short. Another short today. It actually just got out, took advantage of the sell-offs that we saw. There's the ESG 15 also putting in similar trades. TFG putting in actually 2 longs and 1 short. So the G portfolios have just really, EMG's actually just taken a couple trades. Kind of move it along right now. We are looking for there we go. I think it'll be right around here. There we go. So here's a chart of the daily market. Still officially neutral. Unfortunately, didn't switch back to bearish because the market has certainly moved to the downside. But really, essentially, we didn't go, just like we didn't go to bullish given this channel, we're not going to bearish. In the middle of the channel, we did get some follow through. 1040, as we mentioned last week, will be a beautiful inverted head and shoulders formation. Should we get a blast higher above 1100, we'll definitely be looking to break out of this channel above 1120. We're going to see 1200 in relatively short order, but we're going into the fall, so we're probably going to see some downside potential. Should we get some follow through, we may just break this formation. You see all of the indications are to the bear side. Trend following, momentum, horizontal price technical channel. It's all suggesting that the bears are in control, but officially we're going to hold off for neutral now. As you can see, here's a quick look as we're running out of time at a chart of how our portfolios have done recently. MSAUDT not quite at its 50% retracement of its profits yet. Matte Black 100K not quite at its 50% retracement. Generally from 30, definitely at 50%. Once we retrace the portfolios, 50% of the profits that we've made, definitely a great opportunity to add exposure, put in this half of the profits on another portfolio. You can certainly do a smaller portfolio if you'd like, but there's the MAPDT right at its 50% mark. Version 4.0 HR right at its 50% mark. Beautiful opportunities to get involved in these portfolios. And there, of course, is the MSAUDT channeling right here around $5,000 from $20,000 to $25,000 in profit. It's going to be a great opportunity to get in here for the blast higher. We mentioned our updated performance returns. We're going to look at those right here. These are, if you just go to the website and go to the, getting a little bit of delay there, 2007 to 2010 portfolios, you will see the Ultimate S portfolio, 100K. The beautiful thing about this portfolio is that you can choose your capital. 100K, 50K, $50,000 right there, $25,000 for the Ultimate S portfolio. These are all updated from 2007 through August 1st. We mentioned slippage and commission. There you see total commission factored in, $26,000 over the 4 years. Total 3 years, total slippage, $60,000 we've deducted from our performance returns. You can go to the website. There's the day trade version. You can click on these and take a look at the portfolios. If you, unfortunately, we are out of time, you can take a look at those updated performance returns for these portfolios. Essentially, again, taking the MSA concept and broadening it out. 24 models for the Ultimate S, 18 day trade only models for the Ultimate DT portfolio. Really broaden it out. You choose your capital, therefore risk. If you have any questions, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com, and we hope you enjoyed it, and see you next week.